This is FinTech Insider News this week. $330 million boost propels Airwallex to $8 billion valuation. Abu Dhabi launches cutting-edge FinTech hub for digital assets, and US FinTech funding is on the decline. We'll be tackling all of this and more on today's news show, so don't go anywhere.
Running a business means I wear lots of hats. Luckily, when it's time to put on my hiring hat, I can count on LinkedIn to make it easy. I can post a job for free or pay to promote it and get 3 times more qualified candidates. Imagine finding your next great hire in 24 hours. 86% of small businesses do. With LinkedIn, I can also easily share my job with my network. No other job site lets me do that. Post your free job at linkedin.com/achieve. That's linkedin.com/achieve. Terms and conditions apply.
When the holidays start to feel a bit repetitive, reach for a Sprite Winter Spiced Cranberry and put your twist on tradition. A bold cranberry and winter spice flavor fusion, Sprite Winter Spiced Cranberry is a refreshing way to shake things up this sipping season. And only for a limited time. Sprite, obey your thirst.
Hello and welcome to episode 1023 of FinTech Insider, brought to you by 11FS, the 5-time consultancy of the year that works with banks, investment firms, digital banks and fintechs to build the next generation of financial services. I'm Kate Moody, Customer Strategy Director here at 11FS. With less than 2 weeks, oh my God, to go until Christmas, I'm absolutely panicking. We're well on our way to the big day, and while the elves might be winding down, the world of fintech shows no signs of slowing. Helping me wrap up the year are our fantastic panellists. Shall we meet them? First up, an exceptionally warm FinTech Insider return to Ruth Fox-Blader, Managing Partner at Fox Capital. Ruth, always a pleasure to have you on the show. Would you mind just giving our listeners, maybe haven't come across you before, a bit of an intro to you and maybe what you've been up to recently?
Absolutely. Thank you so much for having me on. I am a venture capital investor. I focus on early stage fintech. And this is the last time I will be on this show as the managing partner of Fox Capital because I am launching something new in the new year.
I'm very glad that you caveated it as like in your current role, because I was like, oh my gosh, that's going to be so sad. But well, exciting. I look forward to working back in your new role. But thank you very much for joining us. It sounds like exciting times. Next up, we have a FinTech Insider debut for Lisa Picardo, Chief Business Officer for the UK at PensionBee. Welcome to the show, Lisa. Always great to have a FinTech Insider debut. Would you mind telling our listeners a bit more about you and your role at PensionBee, please?
Yes, of course. Well, thank you so much for having me on for my first time joining you in conversation. So I work at PensionBee. I'm the Chief Business Officer for the UK. For those of you who don't know, we are a leading online retirement savings provider, and we help customers across the UK and the US. We have around 300,000 of them to save for a happy retirement. I joined the business about 6 years ago. Having taken it public, I'm now overseeing the execution of strategy.
Awesome. Well, yeah, looking forward to picking your brains as we go through the news today as well. So thank you very much for joining us. And last but definitely not least, it's a welcome return to the podcast for Thierry Koopman, Partnerships and Payments Lead at Formance. Thierry, thanks very much for joining us. Again, for our listeners who don't know you or Formance, would you mind giving us a quick introduction, please?
Yeah, so I spent about 25 years already in the industry in payments, at the intersection of technology, payments, compliance, legal and finance. And I'm now with Formance, which is a open source ledger solution that can help you with all your financial plumbing and everything you need to move assets around and to keep track of them in a auditable and correct way. So I'm handling partnerships and payments connectivity there.
Awesome. Well, thanks very much for coming back. Look forward to hearing from you as well. Fantastic. So we have a panel now on with the show. Our first story has been covered in lots of different places, but we've taken this one from FinExtra, and that is Airwallex raises $330 million at a valuation of $8 billion. Airwallex secured $330 million in a Series G round, valuing the company at $8 billion, a roughly 30% increase in valuation since its Series F round 6 months ago. The raise comes shortly after the firm hit an annualized run rate revenue of $1 billion, marking major revenue growth as demand for global business payments rises. As part of its growth strategy, Airwallex has established a second global headquarters in San Francisco and committed to investing over $1 billion between 2026 and 2029 to scale its US operations. The company also plans to double its US headcount to over 400 in the next 12 months and expand its global number of employees by over 50% by the end of 2026, underlining a global expansion push beyond just funding. In a striking reflection on the company's journey, Airwallex revealed it turned down a $1.2 billion acquisition offer from Stripe in 2018 at a time when it had just $2 million in revenue, a 600-time multiple, underscoring the founder's conviction in the long-term potential of the business. To tell us more, we have a voice note from Shannon Scott, the CPO, Chief Product Officer at Airwallex.
Hi everyone, Shannon Scott here, Chief Product Officer at Airwallex. I lead our global product vision, building the modern financial infrastructure that helps businesses move money and operate seamlessly around the world. For those who aren't familiar with Airwallex, we're building the future of global banking for a borderless, real-time, and intelligent economy. More than 200,000 businesses already rely on us to power their global banking, payment acceptance, treasury, and spend management. And this new funding helps us continue pushing the industry forward. I'm excited to share that on Monday, the 8th of December, we announced our $330 million Series G round led by Addition and with participation from T. Rowe Price Associates, Activant, Lingotto, Robinhood Ventures, and TIAA Ventures, bringing Airwallex to an $8 billion valuation. This investment not only fuels our US expansion and new global headquarters in San Francisco, but also accelerates our ambitious AI roadmap. Thanks to the FinTech Insider team for having me.
Ruth, I'll come to you first. What were your thoughts on this raise?
Super exciting for the company. Absolutely demonstrating that running into the end of the year, there is still massive interest in FinTech and FinTech at scale, which might contradict some of the other news that we're thinking about covering today in terms of global FinTech investment. I think that I can't help but compare this story to a story from November on Ramp raising at a $32 billion valuation and a $1 billion run rate. So same run rate, different valuation. It makes a lot of sense to me that the kind of key messages, at least towards media at this point, are around US expansion. It definitely feels like perhaps Airwallex is paying in terms of valuation based on where it has been based and operated, as well as AI. We know that if investment has been running away from late-stage FinTech, it's running into AI. But I think that this is a very exciting story for the team.
Yeah, absolutely. Completely agree with all those points. I suppose I wanted to ask your opinion as well on how common is it to see a Series G round, right? Like I couldn't work out if I just hadn't been paying attention, right? But I just, obviously you kind of get used to the letters being trotted out, but like is a G round, do we see those very often? Have I just missed them? Or is this a bit more of an unusual phenomenon from just a straight fundraising perspective?
It's a really great question. It is not a strange phenomenon in 2025 moving into 2026. Companies are staying private longer, and that is partly because of somewhat inflated valuations and the difficulty of squaring private markets valuations with public markets valuations. We've seen a lot of folks pumping the brake on public offerings because of this kind of disparity between the way companies are valued in the private markets and the way companies are valued in the public markets. And there really is an incredible amount of liquidity in the private markets. And so we are seeing, large companies choosing to stay private. We're seeing a number of, brand name FinTech companies choosing to stay private. We're also seeing folks prepare for public market offerings potentially hopefully in 26 and 27. That's always very exciting for us. It's very important for VC that there are these kinds of liquidity events. But I think that this trend of companies staying private longer, raising more money in the private markets is certainly consistent with something that's happened in this venture capital supercycle.
Okay, no, brilliant. Thank you. I really appreciate the context. Thierry, what was your take on this?
Yeah, just on that topic, I was working at N26 back in 2009, and I remember they had at that time a Series C announced just before I joined. And the interesting part is the Series C increased over time. So it was not like this is a done deal. This is what we have now. I think over a period of 9 months, the Series C is increased. So that's, instead of having a G or an F, you could also have a wider window for investment, I guess. So that's a bit similar.
Yeah, no, I think it's definitely interesting to understand. And obviously, you've got probably the deepest sort of expertise in payments. What's your take on what Airwallex are offering in this space? Obviously, the kind of payments space that they're operating in is now highly competitive. Do you think kind of they're offering something that is helping them to cut through?
I think the fact that they're really global and very operationally all over the world is basically a demand that they are serving. They're quite successful in that, but as you mentioned, they're not the only ones. So I'm not sure if there's some consolidation that will happen in the future, but at least it's an interesting space to be, and especially with the evolutions in the cross-border rails and crypto and stablecoins. See at what level these guys will become more or less relevant.
Yeah, no, one to watch for sure. And Lisa, keen to bring you in as well. What was your take on this story when you saw it?
So from my perspective, I agree with what Ruth was saying about companies taking that decision to stay private for a lot longer. It makes a lot of sense in a lot of cases. We're actually slightly different. So we buck that trend. We were a business that went to market in 2021. And so that last sort of big vintage that went public, and I think it comes back to like, what are your reasons for being a public company? So for us, that transition from being private to public was actually quite an easy, straightforward transition because we're a regulated business. And making that shift was not a difficult one. I also think that it gave us that opportunity to raise a large amount of capital to take us through on our growth journey in a sort of one-shot way. And so that's exactly what we did. We raised a lot of money in the public markets at a time where, of course, the markets were open and receptive. And then that has lasted us through the years to get us to the point of profitability. And, only about a year ago, we tapped the markets again for a raise to launch our business in the US. So yes, it's true. Businesses are staying longer for private, but there are also examples like PensionBee that have kind of taken a very different journey.
Yeah, no, absolutely. I think the diversity is really interesting to understand. Ruth, obviously a key part, as you touched on in your analysis, was their focus on using these funds to move into the US and grow in the US further. How do you rate their chances of cracking the US market?
That is a really good question. I'm not sure, honestly. I think that there is heavy competition. I think that where they have really flourished and succeeded is in kind of helping small businesses to, initially move money internationally and really also then solidify their kind of finance and operations stack. And so there are a number of kind of almost incumbent startup competitors in the space operating in the United States. I'm not sure how much of the US market they need to penetrate to achieve the goals that they have, which is to be a company which is respected by US investors and, can play a competitive role. But certainly they have, a lot of arrows in their quiver. They've got $300 million to go after the US. And, they're going to be bringing some level of price competition and a bit more fragmentation to the existing U.S. propositions, as we see business just becoming increasingly international, I think that there is a special role that they can play. And there are a number of different companies that are working together in sort of collaboration and JVs to try to service the customer that Airwallex can probably service out of the box and perhaps more cheaply. So, just we're going to see.
Yeah, no, absolutely. Yeah, I think so many interesting dynamics. I feel like we could discuss this probably for most of the show. I suppose one thing that I thought was really interesting when kind of their CEO, Jack, kind of posted about this raise on LinkedIn was he sort of talked about in some ways that Airwallex haven't been great up till now at sort of communicating sort of their brand and their proposition kind of out to the world. So I'm also interested to kind of see, we sort of said that, the partnerships they've got with the likes of McLaren and Arsenal in the sporting space. We've touched on that a little bit in the show in the past as well, but it sort of feels like they're going to obviously use this money to kind of really double down on some of their key markets, hire staff, kind of build their offering. But it'll also be interesting to see if they also just kind of invest in just telling the world a bit more about who they are and how they plan to differentiate as well. So really exciting 2026 ahead for Airwallex, I'm sure. Okay, I'm going to move on to our next story now. This story we've also taken from Finextra, and that is Abu Dhabi launches FinTech Centre with focus on digital assets. The Emirate has unveiled the new FIDA, don't know if I say that, FIDA cluster, fintech, insurance, digital and alternative assets, aiming to position Abu Dhabi as a global hub for fintech, digital assets, insurance and alternative asset innovation. The cluster is projected to add 56 billion AED to Abu Dhabi's GDP by 2045, create 8,000 skilled jobs and attract at least 17 billion AED in new investment. FIDA will build institutional-grade infrastructure for digital assets, advanced fintech platforms and a coordinated regulatory/innovation ecosystem, integrating regulators, investors, startups, insurers and asset managers into one structure. The initiative supports broader economic diversification and reinsurance, reflecting Abu Dhabi's ambition to lead in tech-driven financial services globally. Thierry, this kind of feels like it's aligned to your world. I'll come to you first. Do you think this is a good move?
I think it's great to create ecosystems and microcosmoses for fintech and specific industries. So it's great that they do this initiative, and it's also it makes perfect sense for them within the context that they have in the Abu Dhabi global markets setup. So I think they try to attract more capital. They try to attract more talent. We'll see what it gives. The investment is in line with a standard AWS region rollout, so that's even more expensive. So it's not that much of an investment for a financial fintech hub, I think. So we'll see what it brings.
And they've obviously gone fairly heavy on the digital assets side of things. I think there's multiple components to kind of what this hub is going to focus on, which I'm sure we can touch on. But digital assets feels like it's a key part of that. I'm guessing you probably have a bit of a bias with it.
Well, they call it digital and alternative assets. So what is alternative assets if they're not digital? So maybe somebody else has an idea there, but what could be an alternative asset? Probably something like real estate or something more like the real world versus the digital world. So not only money. And it's interesting that they go specifically into alternative assets.
Ruth, have you got any hypotheses on alternative assets that you think they'll be exploring?
I assume it's things to do with tokenization. Increasingly, we're seeing a trend towards tokenization of real world assets or kind of synthetic assets. I mean, this makes sense to me given the kind of global mood music ushered in by, the U.S. government with the Genius Act and kind of, in some ways, creating a crypto regulatory environment and in another kind of unshackling crypto from a lot of skepticism and, criticism, frankly. And so this asset class has been growing tremendously, and Bitcoin has seen, specifically tremendous growth. Stablecoins have seen enormous growth. There's obvious real world utility around stablecoins, and there's obvious, tremendous desire to speculate using other digital assets. And so, again, I think Thierry probably, said it best. It's like there's just a ton of capital in this space, and so if you want to create an environment where you can participate in kind of that capital and that business development, sort of nascent business development, one of the best things that you can do is to provide a regulatory environment which is serviceable to the companies that want to work in that space. Capital moves super fast, and so if companies view this particular location as one where they can do the stuff they want to do more quickly than somewhere else, they'll move there.
Yeah, no, absolutely. Lisa, would be keen to get your perspective, I suppose, from the practical side of things. Obviously, they've talked here about sort of integrating regulators, investors, startups, insurers, sort of all in one place. As Ruth alluded to, kind of lots of linking up there. How much of a difference do you think that will make for fintechs, operators trying to kind of really drive their businesses forward?
I mean, it makes total sense, right? I think it is, to have any fintech type of ecosystem that is going to flourish and do well, you need all of those key ingredients. Don't you? You need talent, you need capital, but you really need the right regulatory framework. So yes, I think it's a really positive push if that is the goal.
Yeah. And I suppose obviously we know that the Middle East as a region is kind of seeing huge growth, throughout the course of this year. I'm sure that will continue to be the case onwards into next year as well. Ruth, what do you think the kind of dynamics are? Obviously you've got Dubai as a hub, you've got obviously Saudi Arabia as a hub, Bahrain as well. Do you think there's sort of a place for all of these locations to be hubs in their own right, or do you think we're going to see the emergence of one of them as being more dominant, the way that we have with London, Singapore, New York, for example?
Okay, I'm very boring. I always say the same thing. We'll see. I mean, there's just always these things that are not totally clear to the public. I think what is clear about the Middle East is that the sort of over reliance on oil as a source of riches is something that there's a large attempt to diversify from, and sort of the new economy, which is generated by power and requires energy, of which they have a lot. Really feels like an obvious link. So you have this former source of wealth and riches, which can power a new source of wealth and riches. And given the global demand on both sides, I would say that there might be enough room for multiple markets to be successful.
Yeah, no, we'll have to wait and see, Thierry.
There's also the context of business finds a way. So if they create the right environment, the right structure, the right regulatory environment, I mean, basically it's according to English common law, which is very, very well respected internationally and very, very valued for international businesses. If they achieve creating an environment where everybody's happy, can do their business, can be successful, they'll have the people and the businesses that they want. They can have, obviously they have a lot of money, but you cannot buy a let's now build this and throw some money to it. You have to create an environment, create a ecosystem around that, and if that works, then it'll take off. But just throwing money to it, I'm not that. You'll attract something, but you need to create a flourishing environment to keep the businesses there, and that's their challenge now, I guess. And obviously, by creating this hub, it also means that they have the ambition to create that environment. So let's see what comes out of it. It's a good start.
What do you think they need to do to create that kind of environment? Is there something you've seen in other parts of the world that you think has helped them to drive that?
If you look at some parts of the world that are focused in very specific areas, in the US you have Silicon Valley, right? So that startups, that technology, it's a very unique environment, and people tend to go there because they find what they need there. They find the talent, they find the people, they find the venture capitalists. So if they are able to create an environment for fintechs that attracts that business specifically because they find what they need, then they'll succeed.
We'll wait and see. Okay, on that note, we're going to take a very quick pause. We'll be back shortly.
This is Jason Momoa, and I'll be your finance professor today. Welcome to Banking Smarter 101 with Chime. Bam! First lesson, sign up for Chime and set up direct deposit. You'll be joining millions of members banking fee-free. Second lesson, get cash back on eligible purchases while building credit and a higher APY on your savings. That's how you bank smarter this season. Fa-la-la-la-la, class dismissed. Join Chime today.
Chime is a financial technology company, not a bank. Banking services and a secure Chime Visa credit card provided by the Bancorp Bank N.A. or Stride Bank N.A. Members FDIC. Optional services and products may have fees or charges. Details at chime.com/fees-info. With a qualifying direct deposit, earn 1.5% cash back on eligible secure Chime Visa credit card purchases. On-time payment history may have a positive impact on your credit score. Results may vary. APY means annual percentage yield. Learn about credit building and more at chime.com.
Introducing Meta Ray-Ban Display, the world's most advanced AI glasses. With a full color display built into the lens of the glasses, it's there when you need it and gone when you don't. Send and receive messages, translate or caption live conversations, collaborate with Meta AI, and more. Be one of the first to try Meta Ray-Ban Display. Visit meta.com/Meta Ray-Ban Display to book a demo and find your pair.
Now, a quick break from the headlines to spotlight our latest Insights episode. This time we're diving into the future of small and medium business banking and why banks aren't just building apps anymore, they're building digital CFOs. In this episode, I'm joined by guests from Pleo and MasterCard to explore how small business banking is shifting from simple dashboards to intelligent financial guidance, because SMBs don't just want to check a balance, they want insight, advice, and a financial GPS they can actually trust. If you're looking for the shortcut to navigating smarter, saving time, and unlocking the path your business really needs, this episode is your go-to guide. Find it on the same feed as this one. And now back to the news. Our next story is taken from FinTech Global, and that is US FinTech funding on track to drop 6% in 2025 as deals over $100 million dry up. The latest data shows US FinTech funding in 2025 is on track for a 6% decline compared with 2024's large deals. Those over $100 million have largely dried up. In the first 3 quarters of 2025, total FinTech investment in the US fell 7% year on year. The drop in large rounds is the main factor driving the slowdown, suggesting investors are becoming more selective or risk-averse, especially for late-stage or high-value fintech deals. Despite the headwinds, this shift could signal a coming recalibration, perhaps a tilt towards smaller, more sustainable funding rounds, or increased scrutiny on profitability over higher valuations. Ruth, as you very presciently commented in our first story, obviously we're kind of coming back to the subject of funding. What do you make of these numbers?
What I make of these numbers, we've had a bunch of successful IPOs this year, which is really great in the US. And I think that we have seen a bit of a repricing of assets over the past couple of years. And so we definitely have, this kind of funding gap in later stage funding rounds, which is being highlighted here. I personally don't see it so much in early stage. Venture also is a very strange animal. There are no rules. And so one of the things that founders I work with often find frustrating is like, this guy got this much for the same exact thing and I'm not getting that. And there's really there are still the kind of same mega deals that we were seeing in 2020, 2021 happening in fintech in the United States. And then there are other founders that are struggling to raise and they can't entirely figure out why, because maybe some of the unit economics are more interesting or the revenues are stronger and it feels like the opportunity is equally profound. I personally don't get super wrapped up in this stuff. I think it's important to watch the market and to be hyper aware of how things are moving. The obvious answer to why this is happening is because so much of investor interest has moved to AI, and so many startups are trying to spin themselves as .ai and not necessarily fintech projects, but rather AI projects. And so I don't really know how the data is being collected, but we know that this is a highly social category, venture capital. And so, the mood music changes and the dance steps change, and that's just what happens.
Yeah. Lisa, what was your take on these stories?
Yeah, I mean, I don't, it's a very, very well established and deep market. And there are, there's a plethora of amazing businesses that continue to get funding. So, does the 6% drop mean much? Not really, not in the grand scheme of things. It's not such a bad thing if capital is a little bit more choosy than it has been. Sometimes there's that mismatch of like valuation expectations, and I don't see this as a huge problem.
Jerry, what about you? Are you feeling optimistic about US funding next year, or what's your perspective?
The whole venture capital thing is a bit far from what I'm doing, so I don't have a real opinion on that specifically. So you can cut that out. But essentially, I agree with Lisa. The fact that it's slowing down a little bit might be an opportunity for more quality in investments and more time taken to make the right investment. It's 6% over 1 year. 1 year is a short time. What is it over 5 years? What is it over 10 years? Maybe it's still growing.
Yeah, no, absolutely. And Ruth, obviously from a VC perspective, you mentioned obviously there are shifts in what potentially investors are looking for, obviously a big focus on AI. Do you think founders are kind of adapting quickly enough to those changes and what investors are looking for?
I don't think founders should think about what investors are looking for one bit. I think that they should, I think to Lisa's point, this is a deep and established market, and this is a market, or this is a sector of the economy that has so many problems that can still be solved and still need to be solved. So, as an early stage investor, when I see that potentially valuations are coming down or capital is more scarce and deals are going to be less competitive, I'm like, great, that's great for me. I like that. I think that, is it great for the economy overall? Probably not, because although venture capital is kind of a really wasteful way to innovate, it is it is a very on the other hand, a lot of innovation comes out of it. So it can be on an individual level wasteful, like on an individual level, you can lose money on an investment. But overall, it's a very efficient way to move markets forward and to help, legacy sectors embrace technology and technological innovation. I think it's an amazing time to be building a fintech VC fund. I love when people are looking somewhere else. I think there's something incredibly interesting about continuing to work and do the work that you have enjoyed doing and believe in, regardless of what is popular. And so I'm very optimistic. I don't think that founders need to change their the kind of what they're focused on or the problems that they want to solve. I think founders should work on problems that are worth solving. When it comes to expectations of valuation and ownership, I think it's really important for founders to have a clear point of view on the capital trajectory of the business that they're building, how much capital they will need to bring the business to scale, and how much of the business they need to continue to own in order to feel motivated to do that. And so, I think people have become a lot more educated about venture capital, for better or for worse, over the past, 10, 15 years. And I think founders are highly sophisticated. Many founders who are, multiple time founders with exits under their belts will find it incredibly easy to raise money. They'll raise more money than they ever could have raised before. And those will be kind of outliers, and venture capital is a game of outliers and exceptions. That doesn't mean all of those founders will be the ones that are successful, but it does leave space for investors like me to bet on all different kinds of founders and perhaps to find deals where I can acquire a sufficient stake to make it an interesting project that we can work on together at an early stage.
Yeah, no, absolutely. I think there could be potentially some really strong upsides to that. Okay, well, one to watch in 2026 for sure. Okay, moving on to our next story. This one is from FinTech Finance News, and that is broken beyond excuse. PensionBee calls on government to end pension transfer gridlock. PensionBee's latest report, Faster, Fairer Digital, the Pension Transfer Reset, has warned that the UK's pension transfer system remains broken, with some transfers still taking months or even years to complete. The report identifies a fragmented structure with different rules for schemes regulated by the pensions regulator versus a financial conduct authority, also known affectionately in the UK as the FCA, plus reliance on paper or manual processes as major causes of delays and inconsistency. PensionBee proposes concrete reforms, including a mandatory digital transfer system, a 10-day pension switch guarantee for most straightforward transfers, and full transparency on provider performance. Lisa, unsurprisingly, I think probably makes sense to come to you first. Broken is pretty punchy. What's going wrong? Why do PensionBee see this as being the case?
Broken, yeah, of course. I think broken is a strong word, and I think it is right that we actually shine some light on the system that doesn't really work for people right now. But saying it's broken, yes, but it's also capable of being fixed. And so the question is, like, what is the political will to actually sort this out? And does it need to be sorted out? Last year, there were around 67 billion pounds of assets changed hands. So that's a 1.5 million pension transfers. So this is very much at the centre of a system that does need to work well. And like in the UK, like if you step back and think about the problem, auto-enrollment has been a wonderful thing, but it has sort of proliferated the number of pension pots that there are. So the average person will switch jobs, 10, 11 times plus in their career, and they will end up with a really fragmented set of pension pots. And so it is a necessary thing. It does need to work. It doesn't work. It hasn't worked for a very long time. And so we're calling for real change and real reform to sort of finally fix this problem once and for all.
And what do you think would be the thing that would have the single biggest impact in the short term? Like, what are you most keen to see change fastest?
Look, I think there are a number of things. There are a number of levers that can be pulled, and I think that is the good news. So simple things like, the world is digital. So providers need to move away from wet signatures and manual processes, and they need to go digital. So electronic transfers would be great. And we know that a lot of providers use them. They work really well, and you can move money around in a matter of days. So the adoption. Secondly, disclosure. Right now, if you are a provider that holds on to funds and that you don't let money leave when a customer wants to take control of their pension, you can hide pretty easily because there isn't a framework that says you need to report on how many days it takes. So, let's stop people from hiding. The scams legislation, it was designed to stop scams, very admirable. But what it's done in the process, in the way that it's been drafted, is it's actually meaning that providers are able to hide behind it and hold funds back, flag transfers that really aren't scams at all. So that needs a look at. We have two regulators. They have a different way of looking at things. The FCA looks at consumer duty, and actually just today, so very timely, has launched a consultation that looks at exactly this. But on the TPR side, which is where all of the occupational schemes, all of the workplace side sits, there's 30 million accounts there. We really need those to be looked at because we often see that that's where the worst sort of performance or behaviours are coming from. So we have a lot of different schemes. We have two different regulators. What we need is for the government, the DWP, to kind of step in and sort this out, create one system, one way. Everybody needs to be able to take control of their pension within, we think, 10 working days.
Yeah, absolutely. I could definitely endorse a lot of that. Thierry, has the Belgian government solved this? What does it look like from where you're sat?
There is a fully digital portal called mypension.be in Belgium that organizes and structures all the pension aspects that you have built up in your career, both from a government perspective or all private initiatives around that. I can. So on a personal note, I was able to call some of that money and ask for the funds there because I can use them to invest in real estate. All it took was a mail, and 2 days later, the money was on my account. So I probably can't relate to the issues that are in the UK, and I seem to be lucky being in Belgium.
It certainly sounds like it. Ruth, before I get too jealous of Thierry and his easy life in Belgium, like this isn't a super smooth process in the US, right? Like there's issues in the US too, right? Or is it just the UK that's miles behind?
So I'm really ignorant about this topic. I think we have kind of retirement accounts, and the idea of a pension sort of left with my parents' generation. But it's, as a consumer, I think it's probably one of the most stressful topics that you can ever imagine. And so the idea that people are setting aside capital and potentially having that savings matched by employers and not being able to access it or move it is just a really valuable and worthy goal for any other private companies that need that to function in order to benefit, or public interest groups to make critical and if to make critical to government and also to the companies that they're working with. It's just totally unacceptable. So as a consumer, I can say I have enormous empathy with folks in the UK who are unable to access their hard-earned money.
And, I'm glad you brought up the US, and I'm glad you talk about how the landscape is there, because recently we launched a business in the US. And so we are there to solve the same sort of consumer problem that we solve in the UK and have been doing for the last 10 years in the US, because what you find there is the same fragmented landscape. Consumers really struggling to get on top of their finances. And, bearing in mind, these are really important pots of capital that they have. And so they need to be able to roll their 401ks or their IRAs into a new plan. And consumers are demanding more today, right? They deserve to be served with better technology. They deserve ease of use. They deserve a human touch, real people on the end of the phone when they need that. They deserve much, much better. And they certainly need some help with moving their pensions along, or being able to at least have the choice to move them.
Yeah, no, absolutely. And Lisa, how important do you feel, obviously you guys have launched a petition, right? Like, how important do you feel consumer pressure is to drive some of these changes through? Or, ultimately, is it only going to change when the government sees it as being in their interest to change it? Right? Obviously, we've seen lots of announcements around the budget, around changes to ISAs and incentives around people's long-term savings. So does consumer pressure make a difference, or is it really just up to the government to change this when they can be bothered to?
Good question. It is a real consumer problem. We know this because we have a decade of experience, like living and breathing this. We are a D2C proposition. So we know the feedback from customers. We know when it works really well, and we know when it's really, really difficult. And we know the anxiety and the frustration they can feel. So it is very real, and it's very important that you do canvass that opinion. And certainly we've had a lot of customers share their stories. We have a petition out, a 10-day switch petition. So it really calls for electronic transfer methods to be used. And, we have thousands of people that have supported that. So when we get to the 10K mark, the government will need to respond to us. And we've published a series of reports which we're absolutely very vocal about. And we are ultimately looking to solve this for consumers. That's what drives us. And ultimately, I think that is what needs to cut through to government.
Yeah, absolutely. Well, if you're listening to this show and you identify with some of the frustrations that we've been talking through, we will leave a link to PensionBee's petition in the show notes so that you can go and take a look at it and hopefully support the initiative too. Okay, on that note, we're going to take a very quick pause. We'll be back shortly.
This episode is brought to you by Netflix. So Netflix is basically Santa this year. 2 NFL games on Christmas Day, streaming live. At 1 p.m. Eastern, it's Cowboys, Commanders. Then at 4:30, you've got Lions, Vikings. Midwest football, playoff stakes, and probably some snow. Watching holiday football is a tradition the whole family can enjoy. Open some gifts, grab some food, settle in, and watch NFL Live on Netflix this Christmas Day.
Okay, now for a quick look at one story we don't have time to cover in full, but still deserves a mention. This one comes from payments, and that is Fifth Third to offer commercial card and financial technology powered by Brex. Fifth Third Bank has launched a new commercial card, the Fifth Third Commercial Card powered by Brex, for its commercial banking clients using Brex's embedded payments infrastructure. The partnership gives clients access to Brex's intelligent finance platform, enabling them to issue corporate cards, automate expense management, execute real-time payments, and leverage AI agents to reduce manual review and control spend. The deal makes this a default commercial card solution for Fifth Third's commercial clients across all of its markets and is expected to unlock about $5.6 billion in annual commercial card payment volume. Fifth Third, I personally have this massive issue enunciating the difference between my Fs and my THs. So I love a lot of what Fifth Third do as a bank and find them very interesting, but I always find it very hard to say. So apologies if I butchered it in that. But we had Tom Bianco from Fifth Third on the show way back in 2023 talking about their acquisition of Rise Money and how that would enhance their payment capabilities. And I think to me, at least, it was clear just from that conversation that they were a bank that is so prepared to approach the industry a bit differently, to be a bit bolder. And this feels like it has the potential to be a really fantastic partnership, potentially. Brex's CEO, Pedro Franceschi, I think summed it up really well. He said, together we're giving commercial teams the automation, speed and accuracy they need, all seamlessly connected to the financial institution they already trust. And I think that could be such a powerful combination to be able to bring, the technology and the impact of some of these fintech platforms into some of these banks that have the scale of the customer base. Will be super, super interesting. So yeah, I'm personally intrigued to see how some of the big banks in the US respond to this and how well Fifth Third can roll this out. So another one to watch in 2026 for sure. Okay, and finally, this is the part of the show where we take a look at something a bit different from the world of financial services. And this week, we're asking, what's my fintech age again? There has been a lot of Spotify Wrapped buzz lately, the annual feature that shows you your most streamed songs, top artists, favourite genres, and even calculates your listening age. Our friends at many fintechs now, Monzo, the UK, Up in Australia, plenty of others as well, are gearing up to release their latest version, which, judging by previous years, will give customers a personalised snapshot of their spending habits from favourite shops to category breakdowns. So we thought it would be fun to take Spotify's concept a step further and ask our own panellists, what's your fintech age and why? Today, we're unwrapping their spending patterns and taking a closer look at their fintech journeys. Thierry, what do you reckon your fintech age is going to be?
I don't know if I'm old or young in that context. So how do you position it? From a fintech age, I would say I'm old. From my mindset and the way I look at fintech, I'm probably very, very young because I believe in the industry. I believe in the capabilities. And I think we've only seen the beginning with everything's going on with the digital assets and everything else. So as Lisa mentioned from PensionBee, there are some struggles in digitalization. FinTech can help you out. I think I'm quite young in mindset, but old because I've been there, seen a lot. I have the T-shirt, etc. So, as they say, I'm maybe 24 years with 18 years of experience.
That's a good way of thinking about it. Ruth, what do you think? If your bank spat out an average age for you based on your sort of spend analytics and kind of where it can see you moving and shaping your money, what do you think your bank or fintech age would be?
This is too personal of a question, unfortunately. I think if you're 24 in fintech years, that's like fintech dog years, you're probably like 300. One time during this segment on this show, I got made fun of for eating cake for breakfast. I just want to say I still eat cake for breakfast. And I'm not sure though. I mean, this is a really hard one. I think, I think I know very much what I spend my money on. I really don't need anyone to sort of summarize it for me. I also know what songs I listen to. I have never been surprised. So yeah, I don't know. I think I'm just abstaining from answering this question.
You're doing a very good job. And I can't, I'm so sorry that you were judged for having cake for breakfast, which I personally also do. I think is a really wonderful life choice.
You know what? I sent a picture of my cake to everyone right after the show. It didn't bother me a bit.
No, absolutely. You go for it. Yeah, my main thing with my Spotify, which I think probably also applies to like what my financial fintech age would be as well, right? Is like how well I can separate out like me as an individual versus like me as a parent. So my Spotify actually Spotify is very clever at filtering out all of the innate horrible music I play to try and keep my children quiet or happy. But I made the mistake this year I've got an 11-month-old and she's a big fan of the song The Lion Sleeps Tonight by The Tokens, the one that's like, a win boy, that one. So that came out this year as my number one song.
That's from the 80s,
I know,
right?
yeah. So that came out as my number one song on Spotify. So it gave me, I think my Spotify age was something like 67. So yeah, I'm hoping, I'm fairly confident my fintech age will be lower. It sort of can't be any higher. But I don't know. It's we'll see.
I'd like to be invited back. And I would like for everyone to have to tell the worst song they listened to this year. I'm putting it out there.
That's mine.
Make
and I've listened
real.
to it many, many, many times. Anyway, probably back to fintech. Lisa, what do you think? What's your fintech or bank going to make of you based on your spending habits?
Well, I'm not sure a lady should ever be asked her fintech age, but having listened to everyone else, like the fact that I work in retirement makes me want to skew old. However, retirement is a long journey. It happens over decades of saving. So then I want to skew young. I probably am the only person in the world who doesn't have a Spotify account. And I don't listen to any music. So that is no point of reference. So I'm going to land with like I'm smack in the middle. We live the 100-year life. So I'm going to go with like under halfway.
Yeah. No, that's where all the fun is, right? So
that makes two of us, Lisa. I also don't have a Spotify account, so
it is allowed.
So
you are allowed to not have Spotify. That's okay.
Yeah, I know. But it's the question of fintech age is interesting because I recently met people who had all their savings in crypto, which I would have thought of as being horrifying. But there was a really interesting conversation coming out of that, and one of the aspects was, it's what I know, it's what I understand, it's what I trust. And this was an interesting feedback in terms of age, because I know a lot of other things, I understand a lot of other things, and I'm probably older in terms of fintech age in that respect. And the person I talked to was probably way, way, way younger than me. So in terms of fintech age, again, I might be older because I've seen a lot of other things. And some people would be very young.
Age is just a number, and this age is completely made up anyway, right? So it's not an important one. Okay, well, thank you so much to today's guests. Thank you very much for taking the time to join us and share perspectives on the news. Where can people find out a bit more about you and your companies or what you're working on, Ruth?
You can connect to me on LinkedIn, Ruth Fox Blader. You can follow my newsletter on Substack, Fox News. I will try to bring it back for 2026. I took a brief hiatus. And that's probably it.
And watch this space for what you do next. Lisa, what about you?
Well, you can find me on LinkedIn, and you can find PensionBee at pensionbee.com. You can download the app in the UK or the US and take advantage of a lot of amazing tools, content, podcasts, blogs, etc. if you want to know more about retirement.
New year, new pensions intelligence. Yeah, absolutely. Go for it. And Thierry, what about you?
I'm on LinkedIn, and I'm also writing from time to time a blog post for Formance. So check out the blogs of Formance. and have a look there on how we can provide some interesting features for your future financial activity.
Awesome. Thanks very much. And as for me, you can find me also on LinkedIn, Kate Moody, or you can drop me an email, kate@lendvest.com. Thank you so much for listening to today's FinTech Insider. If you like what you've heard, please make sure to drop us a follow on your favourite podcast platform. And if you really like what you've heard, why not share the podcast with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or FinTech Insider, email podcast@11FS.com. Thanks very much. Goodbye.
So you want to start a business. You might think you need a team of people and fancy tech skills, but you don't. You just need GoDaddy Aero. I'm Walton Goggins, and as an actor, I'm an expert in looking like I know what I'm doing. GoDaddy Aero uses AI to create everything you need to grow a business. It'll make you a unique logo. It'll create a custom website. It'll write social posts for you and even set you up with a social media calendar. Get started at GoDaddy.com/Aero. That's GoDaddy.com/AIRO.
There's fishing. And then there's phishing. Out here, you're after dinner. Online, hackers are after your data. They'll bait you with fake emails, lookalike sites, anything to lure you in. But with Cisco Duo's end-to-end phishing-resistant access control, every login, every device, every user stays protected. Looks like no one's biting today. Cisco Duo. Phishing season is over. Learn more at duo.com.
Hey, Ryan Reynolds here. Wishing you a very happy half-off holiday, because right now Mint Mobile is offering you the gift of 50% off unlimited. To be clear, that's half price, not half the service. And Mint is still premium unlimited wireless for a great price. So that means a half day, yeah? Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.